On Business Incorporated today, Botswana overtakes Kenya on Global Innovation Index. And World Bank cuts Nigeria's economic growth to 3.3%. South Africa Mining declares double dividends for shareholders. Good afternoon. Welcome to Business Incorporated here on Channels Television. I'm Ini John Mekwa. We're sort of as usual with the market and looking at African markets, major African markets today. We see mixed sentiment, but we see a moderate rebound at the NGX. This may be attributed to the listing of the Geregu Power PLC. That's the first power generating company to be listed on the exchange. I am sure that Laddie Williams will give you how it has performed at the close of trade today on today's stock market report, so do watch out for that. Meanwhile, let's look at the other numbers. We see there the market trading positive, mostly because of that 0.06%, but not yet back to the 49,000 points. South Africa is deeply in the red, almost 1%, 0.93% at 65,000 plus. And then in Northern Africa, we see Egypt also in the green, 0.69%, while Kenya closed yesterday almost 1% down. We move over to the Middle East now and see how that market is doing at intraday, and we see that it's a flip of what has been happening in the last 2 days. For today at intraday, all the major markets in the Middle East are in the red. There, Abu Dhabi 0.12% down at 9,896.84. Dubai also down 0.77% down. These are huge losses taken away from the market. 3,353.40. When we go to other parts of that continent, Saudi also down 0.10%. 11,768.37. Qatar also down. It's a red market. Well, they've had a bull run for some days now, so perhaps it's time to take some of those profits. That's what we're seeing in that market. Now let's move to Europe and see that there are many things currently weighing on the world's economy, from high energy prices, rising borrowing, debts, debt servicing, inflation, geopolitical uncertainty, and in the face of course, the war going on in Ukraine. And this has put a whole lot of pressure on the supply chain. Well, defying all these factors, we see German exports rose more in recent weeks than experts had anticipated. Thank God we have Chris here to help us explain the magic they did in Germany. Hi, Chris. Good afternoon. Explain to us, so what magic are you guys doing right there in Germany to escape all of these global headwinds?
One of the key reasons is stronger demand by Germany's two most important export markets, China and the United States. Exports to the US in August rose by 12% compared to the month before. Total value of all goods shipped stood at almost 14 billion euros, or around $13.6 billion. Exports to China, which is Germany's most important trading partner, also increased, but on a smaller scale, rising by around 3%. That slower growth, in part, certainly testament to China's zero COVID strategy, which includes sudden lockdowns and factory closures. Nevertheless, German exports to China did increase. They also rose to Britain and Russia, for that matter. Overall, exports increased by 1.6% in August. Analysts had only expected a rise of around 1%. Total value of these goods stood at around 133 billion euros, or $131 billion, which is 18% higher than 1 year ago, as businesses have been increasing prices for their products. Trade with EU countries slowed. Exports to other nations in the bloc declined by around 1%, and imports to Germany also rose, totaling at 132 billion euros, slightly below the value of total exports.
Yeah, so what does this tell us about the state of the economy, especially in the face of rising energy costs?
Well, the data to some degree shows the resilience of the German economy in the past months, during which encouraging news have been popping up here and there occasionally. That's despite the soaring energy prices, which are a particular burden to Germany's industrial sector, which is key to the country's economy. So this data from German exporters can be seen as another one of these surprisingly good news, particularly as it means capacities in the sector have been made use of, and the overall environment for exporting companies is improving somewhat. The weak euro is making German products cheaper abroad. Cost of transport is finally slightly declining, and the strains to supply chains are easing to some degree. So the conditions of doing business in some areas are not as difficult as they have been for quite a while. But sentiment among companies has long shifted. Their expectations regarding further business have dropped last month to the lowest level since May 2020. That is according to the IFO Economic Research Institute here in Germany. The number of fresh orders coming in have also been declining in recent months. At the same time, private consumption in Germany as well as corporate investment is stalling. So economists are saying that German GDP growth will clearly be negative in the fourth quarter, and Europe's biggest economy is bound for a recession. So positive news today, but the outlook for German exporters certainly much bleaker than today's numbers may suggest.
Yeah, well, at least there's a little bit of celebration there. But how are the markets taking this?
Duly noted would be one way to put it. So some relief that exporters' business has been better than expected, but the focus remains on the outlook, which is gloomy, as we said. In line with that, Germany's blue chips index DAX taking somewhat of a breather today. After 2 days of solid gains, the DAX is shedding around 0.6% in the early parts of today's trading session. Investors keeping their eyes, of course, on the meeting of OPEC and its allies later today. Oil-producing nations are expected to announce a significant cut of production, despite demands coming from important customers like the United States to up output in order for prices to recede.
All right, Chris, thank you so much. We do hope to get more good news, more exports at least for the country. Thank you so much. I'll talk to you tomorrow. Let's go to Asia now, where shares in Asia Pacific traded high on Wednesday after United States stocks rallied for a second day. Hong Kong's Hang Seng Index there. We have the number. Okay, we start with the Nikkei 225. It's almost 0.5% in the positive, 27,120.53. Shanghai, almost the same level, in the negative 0.55, while the Hang Seng Index is in the positive almost 6% at intraday for the Asian markets. And then moving on to the other markets now is the United States, where the U.S. stock futures fell on Wednesday, putting Wall Street on track to give back some of its sharp gains from the last two sessions. There we see the numbers. Dow Jones futures in the red, 0.81. S&P 500 also in the red, 0.79, and then NASDAQ also in the red. The futures are looking red, but let's see how yesterday's market ended. We have Mario Bird with the details.
The U.S. stock market took a major gain on Tuesday for the second straight day in a row, as the Dow Jones, S&P 500, and NASDAQ are showing strong in this fourth quarter of the year. The Dow Jones was up by 2.79%, the S&P 500 up by 3.05%, and the heavy tech NASDAQ was up by 3.33%. This is the largest gain since April of 2020. Many investors are hopeful that this means major gains and recovery in the new year. It is also expected the Federal Reserve will begin to temper off from increasing interest rates. It is also a strong sign that the U.S. economy and the recession will not hit the U.S. Investors are hopeful but are continuing to watch to see how the market plays out until the end of the year.
We certainly hope with you, Maria, that the recession doesn't get to the U.S., even though the World Bank has warned that with the continuous interest rate hikes that the world may see a global recession next year. But as you said, watch and see. Oil prices now, it inched up on Wednesday, extending 3% gains in the previous session ahead of a meeting that OPEC Plus producers that are to discuss a big output cut in what energy executives and analysts see as a tightly supplied market. Brent crude rose 11 cents to $91.91 a barrel after climbing a $2.94 in the previous session. U.S. West Texas Intermediate crude futures picked up 5 cents to $86.57 a barrel after gaining $2.89 in the previous session. While the Organization of Petroleum Exporting Countries and its allies, led by Russia, we call them OPEC Plus, they're meeting in Vienna today and are discussing output cuts as big as 2 million barrels every day. In the metals market, gold prices eased as the dollar somewhat stabilized from its drop in the previous session, although bullion held above key 1,700 per ounce level, with investors eyeing more clarity on the U.S. Federal Reserve's future policy stance. Spot gold was down 0.2% at 1,722.69 per ounce, but was not far from 1,729.39, its highest level since the 13th of September. U.S. gold futures were flat at $1,731.70, and the dollar index crawled 0.1% higher after the unit shed 1.3% overnight to its biggest drop since March 2020. A government survey showed on Tuesday that U.S. job openings fell by the most in nearly 2.5 years in August, suggesting that the labor market was starting to cool as economy grapples with higher interest rates. Let's go to South Africa now. South Africa's mining sector delivered sterling performance in the past year, and that's despite several local and global challenges. And all stakeholders received much welcome value, according to the PwC's SA Miner 2022 report. Minerals account for more than half of South Africa's exports revenue. In 2021, the two largest export categories, precious metals and stones, as well as ores, slag and ash, contributed 43.2% of total exports revenue. Distributions to shareholders more than doubled to 190 billion rand. Capital expenditure grew by 36% and taxes paid increased by 14%. As South African mining companies in aggregate maintained profitability at last year's high levels. Still staying in South Africa, the South African Revenue Service, SARS, trade statistics for August 2022 recorded a preliminary trade balance surplus of 7.18 billion rand. The surplus was lower than market expectations of 23.7 billion rand. The smaller surplus was the result of a decrease in exports of 1% month-on-month and a sizable increase of 10.4% in imports compared to the previous month. The decline in exports came mainly on the back of substantial lower exports of precious metals and stones, base metals and chemical products. SARS said that the year-to-date preliminary trade balance surplus of 136.36 billion rand is a deterioration from the 325.06 billion rand trade surplus from the comparable period in 2021. Exports increased by 11.9% year-on-year, whilst imports increased by 44.9% over the same period. Let's take a break now. When we come back from that break, we do have more stories for you coming from the African continent. Still stay with us. This is Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated here on Channels Television. We start from Nigeria. Not so good news we see there because the Ethiopian government has banned visa on arrival for Nigerian travelers visiting the Horn of Africa country. The developments, which takes effect from Tuesday, is expected to create some hiccups in travel to Ethiopia, and that's according to stakeholders. The management of Ethiopian Airlines, the national airline of Ethiopia, had informed travel partners of the new development. And there are reports that Ethiopian Airlines is one of the popular foreign airlines in the country, operating into 5 destinations. Before, passengers traveling to Ethiopia or transiting through the country from Nigeria could easily obtain a visa on arrival and getting to Bole International Airport in Addis Ababa. But this will no longer be the case, as prospective travelers are expected to get their visa at its embassy in Abuja. And that's according to the new rule. In the memo sent to the travel partners, Ethiopian Airlines said, please be informed that effective immediate, no more visa on arrival for Nigerian citizens. And passengers are to obtain their visa at the Ethiopian embassy in Abuja before traveling. And this, of course, we expect a whole lot of reactions to follow this development. Moving on to other stories, even though we have to come back to Nigeria, we see that the World Bank's Board of Executive Directors has approved $400 million development financing agreement to enhance the performance of the logistics and transportation sectors in Egypt and to support the shift towards low-carbon transportation along the Alexandria, which is the 6th of October, Greater Cairo Area Railway Corridor. Egypt's rail system is one of the most extensive in Africa, with a generally heavier focus on its passengers and 3 freight trains per direction per day in the Greater Cairo area. The rest are dedicated to passenger trains. Well, from Egypt, let's go to Botswana. And Botswana has edged out Kenya in the list of the top global innovators as more African countries punch above their weight to come up with ideas and technologies that increase productivity and output. Botswana is now the continent's 6th most innovative country and ranked among 16 African countries that improved their global innovation rankings in 2021, fueled by COVID-19 pandemic. South Africa is 61 globally, but takes the 3rd position in Africa. Its innovativeness, driven by market capitalization, the highest on the continent, and South Africa is also among countries that recorded the fastest rate of global labor productivity growth between the 1970s and 2020. While Kenya has held the Index African Outperformer record for 12 years in a row, Rwanda, which is 105 globally, and Mozambique is 123 globally, are also consistently improving their innovation status beyond expectation. Rwanda's performance is pushed by quality institutions. Nigeria stands as the 13th in sub-Saharan Africa and 114 globally. And talking about Nigeria, the World Bank has cut Nigeria's economic growth forecast for 2022 while painting a depressing picture of the finances of Nigeria in its biannual Africa's Pulse reports released. The World Bank said Nigeria's economy will now grow at 3.3% from 3.8% its earlier forecast. It also revealed that Africa's most populous nation will see its debt service to revenue ratio surge to 102.3%. Well, public debt in Nigeria is a concern. The World Bank has said in its report that the combination of low production in the oil industry and unsustainable subsidies, beg your pardon, is one of the main obstacles to attaining debt sustainability. Unlike Nigeria, the World Bank says fellow oil-producing country Angola's public debt will decline to 61.9% of gross domestic product this year from 85.7% in 2021. It also said that Angola will expand 3.1% this year from 0.8% in 2021, and that's, of course, because of the surging oil prices. The World Bank also expects the sub-Saharan Africa region's economic growth to slow to 3.3% in 2022 from 4.1% last year. And still staying in Nigeria and talking about oil prices, let's see the performance of NNPC Limited. Since it became a commercial company, they now release their profits after tax.
Board of NNPC Limited has approved the 2021 audited financial statements, and NNPC has progressed to a new performance level from 287 billion naira profit in 2020 to a 674 billion naira profit after tax in year 2021, climbing higher by 134.8% profit growth compared to year 2020.
Today, our production is around 1.2 million barrels per day. We have proven capacity, and this has come to pass in April year 2020, if you recall. Our production, without any intervention, peaked at 2.49 million barrels per day. That means we have capacity without doing anything extra to produce up to 2.49 million barrels per day. But since COVID got abated, and of course the issues around the acts of vandals returned, we saw this gradual decline in our production up to the point of this situation that we found ourselves of 1.23 million barrels per day currently.
Of course, being Nigeria's mainstay, the activities of the NNPC, when it has to do with oil and gas, is a major concern to all Nigerians. It affects our revenue and, of course, every part of the economy. Now, still staying in Nigeria somewhat, Access Holdings PLC, trading as Access Corporation, has announced its planned acquisition of a 51% majority equity stake in Angolan-based Finibanco SA by Access Bank PLC. The deal would be carried out through the purchase of existing shares held by Montepio, the holding company for Banco Montepio, one of Portugal's commercial banks, and that's according to the company's secretary, and it was released in a statement. The full-service commercial bank, Finibanco Angola SA, has over 20 branches, approximately $300 million in total assets, and is profitable and well capitalized. Since 2008, it has operated in Angola with a sizable and diverse base of natural resources. A rising population and the sixth largest economy in Africa, Angola is the seventh largest country overall. Just before we go, I'd like to say again that the very first power generating company has been listed on the NGX today, listed at 100 Naira. And just before I came on, we did see price movement on that. So I'm sure it's a story you want to follow up, and details will come at the stock market reports, which Ladi Williams will be giving during the news at 10. It's always an interesting one here with business. So do stay with us here on Channels Television. I'm Ini John Mekwa. Enjoy the rest of your day.